So the Fed just cut rates by 0.25%. The markets cheered. But if I told you this tiny cut could ignite the next massive stock market shock. That's right. Behind the headlines, something bigger is unfolding, y'all. Because the rate cut isn't just about inflation. It's about power. Power over money, power over the markets, and over the future of artificial intelligence. That's right. We're going to dig deeper into this. And at the center of it all, I want to talk about one company on one island, one decision that could change everything. So in today's video, we're going to dig deep. What is quantitative tightening? And why quietly is draining money out of the system while everybody celebrates. And there's some people really being impacted right now. Then we're going to connect all of it. How NVIDIA's $5 trillion run ties directly to one single factory. And that could be the biggest risk of this whole AI revolution and the global economy. And at the end, I'm going to show you one stock that I'm buying. Because while everybody else is panicking, y'all, I want you to understand sometimes the opportunity hides inside of the chaos. So stay locked in with me. This one might change how you see the market over the long term. Now, before we get into this video, man, y'all know what I need you to do, man. I need you to like, man. I need you to subscribe. And most importantly, man, I need you to talk to me in the comments and tell me how can I make this channel better for you. And let me say this, man. Everything that we put on this channel is 100% education. But you truly got to do your own research. You hear me? It's not that financial advice. I need you to do your own research. I need you to take the information that I lay down, and I need you to compare with the information that you have, and then you make the best financial decision for you. So let's start here. The Fed finally cut rates by 0.25%.
Won't they do?
Well, it sounds small, but this move tells a huge story. When the Fed cuts rates, it lowers the cost of borrowing. And then what happens is they're trying to keep the money flowing because America needs the money to flow. This is like hitting the gas pedal on the economy. But here's what's crazy, y'all. Inflation is still around 3%, which is high. The Fed's target is about 2%. Now, they won't reach that 2% goal until about 2028, and then that keeps getting pushed back. So that means what they're basically saying is we can live with higher inflation for a while. Why? I think the economy is showing cracks. Consumer debt is hitting an all-time high. Employment keeps going up. And the housing market, well, it's frozen because we're in a housing market right now that has more sellers than buyers. So this cut is not confidence. It's kind of like insurance. But we cannot let the headlines fool us, y'all. We cannot. Because every time the Fed cuts rates while inflation is high like this, it's a signal, not of strength, but of stress. So let's dig deep into this right quick. Here's some notes I have from Jerome Powell. So right here is a release to the press, right? So it says, what I have underlined is, in support of our goals and in light of the shift in the balance of risk, the committee decides to lower the target range for the Fed funds rate. Now, the Fed funds rate is the rate at which banks loan money between each other, right? So this is the rate at which the Fed loans money to other banks. I want you to know that by 0.25%. And then to 3 3/4, which means to 4%. So here's what I want you to understand, y'all. Now, he goes on into saying that a reporter asked him if we're going to cut rates in December. This would kind of sent the market kind of down yesterday because he said, we not in agreement. There's 19 members on the board and we all not in agreement on what's the right thing to do right here, right? And he also said, because I want us to keep this in mind, this is why I said they got cracks in the system right now. So you have a government shutdown right now. So the Fed is not getting real data. And so he said that. He said something to the terms of, it's like a car driving in the fog. You need to slow down. And the reason why they need to slow down, they can't make the decision on the rate cut in December is because they're dealing with private data. Now, private data could be faulty, 100%. We know that, right? But at the same time, watch this. With unemployment going up, right? And then you have people now losing their SNAP benefits, right? So remember, in the last meeting, he said that there's pressure on the lower pockets of the economy. Now, here's what we know, and I've said this multiple times, there's more poor people than rich people in the world. So the economy, especially in America, right? And so if the economy is strong, but there is pressure on employment and pricing on the lower part of the economy, then that simply means that the economy is not strong. Just like the stock market. I'm going to be real with you. The stock market is running because of a few companies, right? It's only a handful of companies that's really pumping this thing up, right? If you go look at the rest of the companies, they ain't pumping this thing up like that. But that's a whole nother story. But we got to take advantage of it. What I am saying is the lower parts and the lower pockets of the economy, if there's stress under that, then the economy is not good, right? And if people starting to lose their SNAP benefits and there's already pressure on the low economy and people can't afford food, then the economy is not strong. But this rate cut allows the richer to get richer. Now, I'm not saying to hate on nobody. My goal is just to help us understand what the hell is going on right now. Right. And this is why I feel like we should be trading, we should be investing. Why? Because this is how we offset what's going on. So here's the thing that nobody's talking about. Most retail investors miss that while the Fed is cutting rates, it's still tightening. Watch what I'm about to say here. It's still tightening liquidity behind the scenes through what's called quantitative tightening. So what is quantitative tightening? So during the pandemic, I'll say it like this will be easy. During the pandemic, the Fed was buying bonds. Right. And so while they were buying bonds, what they were doing was pumping money into the economy because every time they would cash out on the bond, they keep buying bonds. Remember, bonds is how America pay off debts. Bonds is how America keep going. Well, remember that the Fed is an individual entity. So it's not a part of like the government. Right. It's living on its own terms. This is why Donald Trump can't fire the Federal Reserve. Because if you haven't, go read this book called, let me tell y'all this. Go read this book called A Creature from Jekyll Island. If you really want to understand about money, if you really want to understand about the Fed, if you really want to understand how this thing works, go read that book. You'll see that the bankers, J.P. Morgan specifically, told the government, yo, y'all just make the policies. We'll deal with the money. And so they came to a town in Georgia, Jekyll Island, 6 of the biggest bankers in the world, the Citibank, the J.P. Morgans, and a couple other people, right, that actually make money off of America, 100%. They get a percentage. They get a dividend from America. All right, so now quantitative tightening is simply like this. The Fed is saying, yo, the bonds that we once were buying, right, we not going to cash in those bonds to buy more bonds. We going to cash in on those bonds and just get that on our balance sheet. That's right. So now with the Fed not buying more bonds, this is called a balance sheet runoff. They're letting the bonds expire without paying it. So they letting the bonds expire, they getting the money, and they saying, no, we're not buying no more bonds, right? That is a balance sheet runoff. Meaning we gonna just let our balance sheet keep building up. We not buying no bonds. So when this happens, money literally leaves the system. Why? Because the Fed is getting the money from the bonds maturing, and then they saying, yo, we not putting no money back in the system. So what that means is less liquidity, which means there's less fuel, not just for stocks, but for the economy. So think about this. Water is running from a drain, from a pool, but the pool is the liquidity, right? But the water is going out the drain. It's like taking the air out of a balloon while pretending that the balloon is going to keep floating. So that's what the Fed is trying to do, right? They're going to cut rates just enough to keep the growth alive, but pull back the liquidity. So inflation doesn't really explode. Now think about it like this. Liquidity, which is money, is the oxygen for America. So the Fed controls the air, and right now they're rationing it out. I hope this really making sense to y'all because I want y'all to understand how this thing is really going, right? And so I had wrote some stuff down that I want you to see. So the next cut in December, this is something else I want to bring y'all to. Right now, as of the meeting yesterday, right, there was a 92% chance that we would get a rate cut going into December. Now, I still think this rate cut possibility is high, and this is based on a Fed sheet. This is not mine right here. The thing about this is, this was before yesterday. Now, remember, I told y'all it's going to come down to 3 phases. The first thing they're going to do is what? QT. Now, they did say in the thing December 1st. So they're going to end money tightening December 1st. They're going to do a balance sheet runoff, which simply means first we stop QT, which means we're going to stop tightening. Second, we're going to lower the rates. Third, we're going to put the money back into the economy, which is what? 2026. And that's when inflation gonna pick back up. So what we gotta understand is like the more money that goes into the economy, watch this, y'all, the more our dollars lose what? Value. Which is why I keep telling you, buy you some gold. And I just want you to understand this. Buy you some gold. Now, these little pieces right here cost me about $500. Now, you might be like, Trav, ain't nobody about to buy that. Well, I just want you to buy a little bit, and this goes back into my vault. We have this put up in a safe place because I want to keep it stored, and I keep buying a little bit every time. I've been buying it since 2019, so buy you some gold. Keep buying it, right? Because there's going to be a point in time where you're going to need it, right? Keep buying you some gold because this is what a value is going to be at. And, of course, you're going to buy your Bitcoin. I know that, but these, buy you some gold. Buy you a little bit at a time. Buy you a little bit at a time. So there was a 92% chance that rates were going to get cut before this meeting. I still think that stays, right? The Fed can't really just say, yeah, we're going to do it. Or, he's going to speak in moderation. He's going to say, hey, yo, we need some more data. We can't get the data until the government shutdown is over. He said, we're going to keep scraping and fighting to get this data going. And I think that is true, right? But also we know what they're going to do and we know how they get down. So let's transition a little bit and go into something that I wanted to talk about that I think is really, really, really important for us. And let's talk about NVIDIA. Let's talk about this amazing company that is now worth $5 trillion. It was the first company to hit $4 trillion. Now it's the first company to hit $5 trillion. This is the biggest name in the market, hands down. It's not just a chip company anymore. It's really the foundation to the entire AI revolution. Again, worth more than $5 trillion. And I think by sometime next year, it'll hit a $6 trillion mark. That's probably like a $300 mark, $325 stock price. It makes up 7% of the S&P 500. That means if NVIDIA sneezes, the entire market catches a cold, right? I want you to understand how strong this company is. Here's what most people don't realize. If you ask them about NVIDIA, they say NVIDIA makes chips. Well, NVIDIA doesn't make the chip. They actually just design them. They own the intellectual property behind the chip. It's like the Wizard of Oz. You remember watching the Wizard of Oz and Dorothy was on the yellow brick road and they went to see the wizard and they realized, wait a minute, yo, bruh, you a phony. Like, you can't even do the stuff you said you was going to do. Well, I'm not saying NVIDIA is phony, not by far. But what I am saying is they don't make the chips, which means they're actually not the most powerful company. They just have the intellectual design. They got to make the chips. And so the most powerful company in the world, in my mind right now, would be TSM, Taiwan Semiconductor, because they're the manufacturing company. They produce 80 to 90% of the world's advanced chips. The same chips used by NVIDIA, the same chips used by Apple, the same chips used by AMD and every other supercomputer on the planet. TSMC creates the M series, the A series, the A100, the H100, the H200, and the B200, right? This is what the entire AI revolution is built on. Here's how things get really, really intense for me. And as I think about this and as I think about what's going on, I'm like, yo, this is crazy. China has been rapidly expanding their military operations. I'm talking about they've built naval boats, 17 landing ferries with the ladders that come down that can hold tanks, soldiers, and even a small aircraft. Think about that. 13 ships in development right now, and all of this should be finished by 2026. Why am I saying this? We've also seen China do the thing where they surround TSMC. They surround Taiwan with boats, and they said, it's just practice. When have you ever seen somebody point a gun at somebody from practice? Now, mind you, Taiwan is only a hop, skip, and a jump from China, and it's so small. China military is big. Now, we know that TSMC does have some... They build a plant over here in America, but they said, hey, it's almost impossible for us to uplift everything. So this is why the world's going to have to protect Taiwan from China. Like, they are the foundation to the entire AI revolution. And so my thing is, one island, one company, one spark, a $5 trillion market value could evaporate. And then that can truly kill everything if this company is not protected. Y'all know what we saying right now? Protect this company at all costs. That's what we got to do. Because if this whole revolution is built on top of this one company doing 80 to 90% of all the manufacturing, yo, there's a problem right there. Now, I'm not saying that everything about to go crazy. I'm not saying that China's about to attack Taiwan Semiconductor. But what I am saying is we got to brace ourselves. Now, let's zoom out a little bit, right? So you have 7 companies: NVIDIA, Apple, Microsoft, Amazon, Meta, Tesla, and Google. They make up 35% of the S&P 500. Only one of those companies is not using Taiwan Semiconductor. But let me backtrack that. Only one of those companies is not using NVIDIA, and that's Apple, because Apple understands the power of, we don't need that one single point of failure. Let me say something. If you're an entrepreneur, you should not have a single point of failure in your business. The one thing I love about Apple is they find ways to be vertically integrated. Like what Apple does is they was trying to get off Broadcom, they was trying to get off Qualcomm. They was like, yo, the thing that we rely on you to do, we need to at least do some of it in-house. And they slowly but surely backed up off some of those companies. And you know why? Because they didn't want to be like just dependent on those companies like that, not just for integral parts of their business. So when people say the market is up, I want you to say what they really mean is, there's a few stocks that's up, and now these stocks are now become solely dependent on one company, and that's going to be serious, because that's dangerous. What's called concentration. If one stumbles, the whole market shakes. Think about if something happened to Taiwan Semiconductor. What would that do to the companies that's driving the market? Think about it. NVIDIA drives AI, Microsoft drives the cloud, Apple drives hardware, and Meta drives attention. Now, of course, Meta, I think, is a good standalone, but Meta also is putting a lot of money, into the AI revolution. So now these companies become the pillars of the market. Now, remember, I always say something, that every bull run has a theme. And so what is the theme of this bull run? The theme of this bull run that we are in right now is AI. What they do? Now, they're all connected by the same supply chain, the same liquidity, and the same Fed policy. See how we loop that all in? And so I want us to understand what's ahead and how things are moving. These companies do have the financials, unlike the dot-com bubble. These companies definitely have the financials. They have the revenue, is all there. But if any one of these companies weaken, there's a tremor that could ripple through your entire portfolio of America. And I want us to see that. I want us to just pay attention to that. My goal is not to frighten anybody. My goal is not to tell us this thing is not what it is. But my goal is to tell us, let's pay attention. I want to talk about a company that I like. I think it gave us an amazing discount the other day, and I don't think people are fully going to, yesterday, and I don't think that people are fully going to take real advantage of it. Here's why. Here's what happened. The company gave us a strong earnings call. I'm talking about a really strong earnings call. This is an opportunity. Because in chaos, there's always an edge. So Meta reported a really strong quarter. Revenue is up 22% year over year. That means money is coming in more than what they had in the last quarter. The ad impressions is up 20%. They got $28 billion in free cash flow, and they raised their guidance. Now, here was the thing. They had a one-time tax bill of $15.9 billion, and that hit earnings really, really hard, right? And so the stock dropped by like $70. 7-8% the stock fell, right? And I'm looking at it like, yo, this is great. You know why? So because of the tax bill, that $15.9 billion came out right then and there. Now, they had an earnings estimate of like $6.69, $6.79, something like that. If they didn't have to pay the tax bill, they would have had a $7.25 earnings, which would have punished. It would have punished earnings. Stock probably went up $70. But that didn't happen. So because the stock fell by $70, I think this is truly an opportunity. The user base is expanding, so the dip is just weakness. It's a discount. Now, I know what you're going to say. Man, Trap, can't nobody afford that $700 stock. Can't nobody. I got something for you. I want to show y'all something that really happened to me, right? So watch this. I'm going to buy one share of Meta, but I'm going to show y'all how I'm going to do it. I'm not buying a hype. I'm buying conviction. Because I'm not uncertain about this company. Like, Mark Zuckerberg is truly growing this company at a rapid pace. So here's what I want to do. Here's what I want to show y'all. As you can see, this is a Robinhood account. It's up $6,000 year to date. Now, I'll be honest with you. I had $10,000 sitting there, and it's been sitting there for a long time. I didn't realize I had the money in the account until the Crawford Canelo fight. I was trying to make a bet on a fight. I was actually trying to put $25,000 on a fight, but I realized in the moment that I couldn't bet in Georgia through DraftKings or nothing like that. And I remember that Robinhood was doing it. And so I was like, oh, that's cool. So, I ain't really trusted Ricky. So I put a couple dollars on it and I made like $3,000. I was like, oh, that's dope. So then I was like, well, let me just start playing. So I just started playing with the account. I started like doing a couple little option plays here and there in the account. And wound up coming up on $3,000. So you can see the account is up 61% year to date. Got a buying power like $375. So what I'm gonna do is though, I'm gonna do something for y'all in here, right? So I want to show you that we can actually buy shares, right? If we do what? If we lock in on it. So one of the things I'm gonna do is I'm gonna show you something. Yesterday I was up $1,600. You know what I'm saying? $1,600 when I dropped it. So that was really cool, right? I was like, all right, let me show them something. And so what I decided to do was like, so if you wanted to buy 1/10 of a share of Robinhood, right? Because you can do that, it will cost you $70. Right? If you want to buy 1/5 of a share, it will cost you $35. So there's no excuse. $35, $70. And I used to be the one to say, man, if you ain't got no money, man, if you can't buy a whole share. And I've been truly changing because I realized that people truly want to get into the market. And it's my goal, it's my job to help us get into the market the right way. Start where you can, do what you can, get in. So I just want to show you this right quick. If you wanted to buy 1/4% of a share, it would cost you $175.85, right? If you wanted to buy a whole 3/4 of a share, it'll cost you $525. And if you wanted to buy a whole share, it'll cost you $700 and something. The important part of this is, so I'm gonna go in and I'm gonna go buy 1/4% of a share. That's right. I'm gonna buy 1/4% of a share. Because I want us to see that we can play this game and we can win this game. And my goal is for us to start where we can. So I'm going to buy 1/4% of this. And what I'm going to start doing on this page is I'm going to start doing little things on this page, right? Doing little trades on this page, cheaper trades. I'm going to start doing little, buying half a share, just doing stuff like that, just growing an account with no nothing. Just growing his account for his YouTube page, doing some buying whole stuff, just letting the account grow. It don't matter. And I just want to show you that we can do it in real time. So the account's at 16,000. We'll just see what it do. And I'm going to do that for y'all.
Won't they do?
I know y'all don't really give a damn. But here's what I want to say, man. Fear sells. Conviction is what builds wealth. And so when I see a company like Meta that really knocked it out the park, but they had, that happens to all of us. You know what I'm saying? But I want us to think bigger picture. A system is at crossroads. The danger side of anything that you're doing, you're not really looking hard enough. And we can never just let greed fuel us. So here's what we do know. The Fed is cutting rates, yes, but they draining liquidity. The AI, boom, yep, it's soaring, it's running. So being able to play the market from so many different ways, being able to analyze so many different things. This is the calm before the next rotation. This is the shift from hype to value. And the investors who position themselves now, you won't just survive, family. You'll own the next wave of wealth. And we understand there's a wealth transfer coming between now and 2035. Biggest wealth transfer of all time. And my goal with this channel is to position us as trappers, as a family, to be the next generation of wealth builders. So before you chase the next AI breakout, ask yourself this question. Do you own the companies that can actually survive in a tightening cycle? Or are you just riding momentum? And the reason why I'm saying is because you got to be aware of it. Because this new era, discipline will beat hype every single time, y'all. And I don't want y'all to just be hype. I want you to be excited about the opportunities, but I want you to be disciplined. So if you found this video helpful in any way, if you found it valuable, man, hit the like button for me, man, and subscribe. Drop a comment below. What do you see the next big opportunity? In the AI, in the energy, or the value? I definitely have some dope energy stocks I want to talk about. I'll probably do that in my next video. And as a reminder, y'all, we don't need to time the market perfectly. We just need to understand where it's heading and be one step ahead. It's your boy, the Wall Street Trapper, man. I love y'all. I appreciate y'all. And Wall Street looks like us now. Let's go.